Hello and welcome to Gold Core TV, your home for precious metals news, views, interviews, and podcasts. And I'm with precious metals expert Mark O'Byrne, and we're taking a look back at last week and a look forward at this week. Mark, welcome again to Gold Core TV. We saw a strong rally in precious metals last week. What was the main driver in this?
Yeah, thanks for having me on again, Dave. I suppose we were oversold. We've had a good rally this year, and gold prices went up to all-time record nominal highs above $2,000 per ounce. And then we've seen weakness creep in recent weeks, and in particular, there coming into towards the end of November, there was a very sharp sell-off, and gold went from just in preparation for this, we went from 1840 down as low as about 1765. It was quite a sharp short sell-off in a relatively short period of time, and you would expect a bounce from that. And I think that's what we've seen. It's been seen actually quite a few times in recent years. I think every year except 2018, there has been weakness coming into year end, and we're seeing again this year. So it was unusual as well, because I suppose it came at a time when there was no, breaking gold news. There was no very relevant or pertinent financial or economic news. There was no big data releases or anything like that. And there was no significant moves at the same time in terms of the wider stock markets. So there are the usual allegations of manipulation, and whilst there are manipulation in the futures market that pushed prices lower in the short term, and I mean, that's quite possible given the, I don't think people, the powers that be, should we say, would want gold prices going to record highs coming into year end, particularly as we have the precipice of a potential hard Brexit in front of us, and we also have the Biden versus Trump battle, and Trump going legal in quite a big way. It's going to be I think it's going to be a very volatile few weeks, unusually volatile coming into year end. And I think normally traders would switch off come, the third week in December, and head off on holidays to a degree, and you would see the volumes decline, and you could see sharp movements one way or the other come into year end. I think this year, I think given the risks that are there, I think there will be more people at their desks. And the bottom line is, I think, we've seen this in recent years. As I said, there's been weakness coming into year end, and then you've seen quite significant strength, particularly coming into around the 21st, the third week, entering into the fourth week of December. There tends to be a very sharp rally in there at the end of December, then into early January. I think we'll probably see the same thing again this year.
And do you think, Mark, now with this sell-off, that we've formed a base for gold and silver prices rather to move higher from here?
As ever, it's impossible to tell in the short term, but it looks quite likely. I mean, we could get a one last sell-off in the coming days, but I think more likely is that they have bottomed. They may have bottomed on November 30th. On that day, I think gold got as low as 1765 intraday, and silver got down just above $22 per ounce. So we've now rallied to $1835 on gold, $1,835 per ounce, and on silver up to $23.75. So it's quite a significant little move in a short period of time. That would suggest that the recent weakness and sell-off is over. But yeah, it's a volatile world, and anything is possible in the short term. So I think, as ever, people need to be focusing on the medium and long term, and fading out the short term noise.
And now, if we talk about the dollar for a moment, the dollar's continued to go under a lot of pressure lately, which is obviously a contributor to gold's rally. What's going to stop this rout for the dollar?
Yeah, as you say, it's come off quite a bit over the last few months. I think it went from 110 on the euro to 121. So quite significant dollar weakness, quite significant strength of the euro in particular. And over the year, both the euro and the Swiss franc have done quite well, as of gold. Obviously, the strongest currency in the world this year is gold, which is up 20% in dollar terms, and about 13% in euro terms. So what's going to stop it? Well, I think it's overvalued short term, because The US has very significant economic challenges ahead of it, fiscal challenges. I mean, the national debt has gone up over 27 trillion, and that's just the nominal national debt. There's also off-balance sheet liabilities of between 50 trillion and 150 trillion, depending on who you ask and which expert sources you consider the off-balance sheet liabilities with. But these are real liabilities. So, whether Biden is in the White House, which obviously looks most likely. If he's in the White House, he's going to spend much more, because he is anything but fiscally conservative. And therefore, the fiscal position of the US will deteriorate quite significantly. If Trump gets in, I think he'll also spend quite a bit, obviously, because, the US is, there's a very sharp, I think, recession or indeed depression ahead of us, given the scale of the lockdowns and how shut down all our economies and trading, particularly of the small medium enterprise sectors around the world, have been shut down in effect. So the big tech companies are doing really well, and that's why the S&P 500 is at all-time record highs, because I think it's four of the biggest tech companies in the world are on the S&P 500, and they account for a large part of their capitalization. But anyway, I digress. The US, the fundamentals of the US are not great, and therefore the strength we've seen in the dollar, I don't think it's that sustainable. But at the same time, the EU has its own challenges, as does the UK, and we have Brexit ahead of us. So it's hard to make a call because there is so much risk there. But I think in the short term, the dollar does look overvalued via the euro anyway, and you would expect a bit of weakness in the coming weeks.
And let's talk crypto for a second. Bitcoin has traded all-time highs now recently, but we're seeing a sell-off while gold is rallying. Why is this?
Well, yeah, it's hard enough to fathom the movements in the dollar and the euro and the gold prices day to day. You can obviously do it over the medium long term, and Bitcoin, it's even harder to be in any way confident in terms of analyzing and attributing the reasons for market movements and the movements in the price of Bitcoin. But I think the bottom line it had risen massively over the year. I think it's up something like 170% year to date. So I mean, that's a massive gain from below around $7,000 per Bitcoin at the start of the year to we got up to near the $20,000 per Bitcoin level. So it was overbought. It was overbought from a host of perspectives, including technically speaking, and I think Wall Street and the technical people who follow Bitcoin, one of the benchmarks they look at technically is the RSI, the Relative Strength Index, and the 14-day RSI, and that clearly shows that Bitcoin is overbought. So you would expect a correction, and but the mood music towards Bitcoin is becoming more and more positive. There's a lot of institutional uptake, a lot of big players on Wall Street, and large institutions are looking at Bitcoin in a more favorable light as the weeks and months go by. So, but having said that, Bitcoin is extraordinarily risky vis-a-vis gold, and there's no comparison. It's not a store of value. To me, it's a binary. It probably will do very well indeed, and there's talk of Bitcoin going to 50,000 in 2021, but it could go to zero. It is binary. It goes a lot higher, or it goes a lot lower, and potentially as low as zero. And the regulatory risk is quite high, but at the same time, you have to acknowledge the regulatory risk is going down because of the adoption that we're seeing, particularly not just by the small, the anti-fiat currency, or the people who are, gold bugs or Bitcoin bugs, people who question the fiat monetary system. There is a wider adoption now by retail investors and indeed institutional investors. So that means the regulatory risk is possibly going down. If governments and politicians see that the institutions are adopting it, then they may be less likely to intervene and regulate it. But it depends on the regulators. Some regulators might see that as a risk, that the institutions are adopting it, and therefore, certain regulators and certain politicians would be more likely to try and regulate it. So it's interesting developments in the Bitcoin space, that's for sure.
Right, and finally, Mark, is there anything particular you're going to be watching closely this week?
Not really. I mean, I try tune out the daily noise because there's so much of it. There's never been so much noise in the world, arguably, and so I try to avoid the breaking news on the hour and the Twitter chatter and the Trump tweet machine. And I also try to tune out the sort of the daily prices. It's funny. I was talking to my neighbour the other day, and he trades the natural gas market. And he said, "Oh, I see the gold prices fell and they went below 1,800." And I said, "Oh, did they? I didn't know that." And he was amazed that I didn't know, because I like to try focus on the, keep an eye on the weekly and monthly, keep that focus on the long term, because that's where the value is. At the same time, you have to be mindful of this hard Brexit. In the last 24 hours, things have seemed to have deteriorated, and it's we're coming to it's crunch time, really, and also the Biden president elect, as himself and the media call him Biden, and the President Trump is going legal, obviously, and so there's real risk there. But I try sort of check it out once a day or every 2 days just to get a feel what's going on there, and actually, yes, see what's happening and being said both in the mainstream media and alternative media, and what Trump himself is saying every 2 or 3 days. I have a quick look at the Twitter account because it's absolutely unprecedented what's happened in the world, and it's interesting to say the least. But it creates a lot of risk for the wider financial markets that I don't think people are appreciating. And stocks are at all-time record highs, Dow 30,000, and Trump trying to take credit for it. But there is, huge financial risk, and I think these markets are looking very toppy indeed. Having said that, I've thought the stock markets were toppy for a few months now, and they've kept going higher. And it does speak to the point that we've long underlined, that if they pump enough money into markets, and if you debase the currency and engage in massive quantitative easing, whereby they're buying stocks, bonds, ETFs, everything except the kitchen sink is being bought, then that is going to support the markets, the stock markets, and could lead to even higher prices. So who knows? We could see Dow 40,000, 50,000, but in that scenario, what will the dollar be worth ultimately, So yeah, bottom line is tune out the day-to-day noise, focus on the medium and long-term fundamentals of both gold and silver, which looks even more undervalued. And it's quite encouraging, actually, that silver hasn't fallen by as much as gold recently. It's remained quite strong. And I think that bodes very well for both precious metals in 2021. And I think we're going to see much, much higher prices in both. But again, fade out, just focus on the ounces and the amount of ounces that you should own, focus on the allocations, how much of a portfolio you should have in precious metals, and indeed focus on owning them in the most safest ways that you can, which is obviously taking delivery or owning it fully segregated, fully allocated.
Mark O'Byrne, thank you very much, and a refreshing perspective and good advice for the mental health, staying away from the day-to-day news cycle. Thank you very much for joining us. And I just want to remind everybody to click subscribe, hit the notification bell so you can get advised of all these updates as they come due, and go on to goldcore.com and sign up for our market updates. So until the next time, goodbye.